Good morning, Jags. This is Fahad. Today is Wednesday, June 17th. How's everyone doing?
Doing pretty well. How about you guys?
Good.
Good.
Good. Okay. Not much to add to the technical picture of the S&P, so we're just going to take it day by day and figure out what's going to happen. Big thing is 3,000 support continues to hold, but we still have not overcome entirely the 1,800 point sell-off we saw in Dow Index last Thursday, but we're gradually making our way back. It's taken 4 days to get back to that level. So 3,200 becomes the resistance. So 3,200 is your resistance, 3,000 is your support, and there's all that. That's all there's to it. Okay. A couple things on my watch list. AMRN, AMRN. Chronicle discussed in today's first read an interesting update on this stock, and I'm wondering if this is going to be in play today. So remember, AMRN fell apart last year or a couple months ago badly because the courts have found out that the company was infringing the patents for Vasepa, which allowed the Apotex to come to the market with a generic version much quicker than expected. And so they went into arbitration for a long time with the lawyers discussing, and now this news is out that Apotex regarding its marketing application, which was seeking approval for generic Vasepa, is now going to be delayed all the way up until August 9th of 2029. We're talking 9 years from now. It could still be a little bit earlier if AMRN loses its appeal in the court. So while the risk is not completely removed, but this is a little bit of a positive news for AMRN. And so considering how much this stock has fallen from where it was late last year in December at $25, $26 per share, and that's when the news came out right over here in March when it really completely fell apart. I wonder if we're going to see some kind of pickup in call buying today. So stock is guided higher, about 40 cents or about 6-7% in pre-market, but this has very, very active option chain. I haven't seen any much of activity, so I will keep an eye out on this one, see if some weekly or some short-term call buyers show up when the market opens. There's still a large gap that remains to be filled, and could be one that could run on this particular news. And I still have not seen any kind of analyst notes or comments on this one either. So there's that. Second one that I'm watching is home builders, particularly Lennar, LEN. Now I discussed this in the chat room a little bit yesterday as the management conference call was going on, and I was just talking about the big takeaways that I was seeing. But it's not just Lennar. If you look at the technical picture, Lennar has a setup for a breakout through $65 resistance. And yesterday and day before yesterday was a very, very large bullish engulfing candle when the stock was up like 12% or so. And then yesterday was a nice follow through, but also very high volume as the earnings call that was taking place. So this has a setup for a technical breakout. And then if you look at DHI, which is also doing the same thing, that's DR Horton, this one is also starting to break out, starting to clear the major VOP congestion level that are all staggered around this $55 level. And also, once again, on DHI as well, the volume was very high yesterday. Then you go to Pulte Home, PHM. This also has the similar look, very big bullish engulfing candle day before yesterday, and then a follow through yesterday. Decent volume, rising volume, and it's now going to be attacking $38 resistance. And then lastly, if you go to Toll Brothers, not as good of a chart as some of the others, but basically all of them. Now, I bring this up because it really catches my attention that when Lennar CEO in the earnings call yesterday said that their new order growth improved for both month of May as well as in June. And specifically, they mentioned that May order growth was up 7% year over year. I'm not talking about sequential improvement because that clouds the judgment a little bit. year-over-year growth. May was up 7%, and then June, for the first 2 weeks of June, was up more than 20% year-over-year. So that's a significant improvement that we're seeing in the new order growth. And then the CEO also talked about in the earnings call that a lot of it has to do with the COVID-related disruptions, where people that live in the inner cities, and in urban areas, they are basically disrupted by COVID, and a lot of families are looking to move out to the suburbs, where the price points also tend to be lower. So we're seeing a little bit of a shift from urban to burbs, and that could potentially be a secular play now, depending on how long this COVID scare continues. That may continue for a while, for a couple more quarters for these companies. So with a growth rate now on a year-over-year basis running more than 20%, for Lennar, there's little reason for me to believe that this stock is going to continue to stay below the prior 52-week high. I think there's a good chance that Lennar is going to break out through 65, and I think we could see a new 52-week high pretty soon. The book value for the stock, which is what a lot of these home builders go by, is also starting to rise as well. So for the fiscal year 2020, the book value per share has now gone up from $45 per share to $51. With the stock at 63, it's only trading about 1.25 times book value. And so that's positive as well for the company. The dividends they continue to honor that. There has been no other disruption. So nice technical setup on Lennar. So I'll be watching this if it's going to see more follow through. And while I'm at it, the important thing is that, in case you haven't been following much, the mortgage applications that come out every Wednesday morning, they have now shown 8 straight weeks of strong positive trend in mortgage applications. So today's data was also up about 8% this morning, which is slightly less than the 9.3% for the composite reading that we saw MBA mortgage applications last week. But nonetheless, this is now a 9th straight week of high single digits or low teens growth rate in the mortgage applications for the home builders. So that's also positive. But it's not just that. There's a ton of home builders data coming out. So yesterday we got the housing market index. At 8:30 today, we're going to get the new housing starts. And then there are 2 other data points that are coming out next week as well. So over the span of this week and next week, there are a total of 6 data points that are coming out related to home builders. So I think that combination of all those macro data points that continue to be better and better, on top of what the CEOs are telling us about their new order growth, there's good reason to believe that the home builder sector in general could be in play. And Lennar is the one that would be my preferred way. So I'm watching if it's going to break out and run. And the last thing that I want to discuss is AMD and NVIDIA. An interesting update on both of them. Now, NVIDIA had some weekly call buying a couple days ago. They were attacking 360 strike calls. They were accumulating. Even yesterday, I saw in NVIDIA, they were buying some. The stock was down a little bit yesterday, but they were buying some of the July 370 calls, as well as some of the weekly calls here at the next week, and as well as the following week, around 370 strike. And the stock has been consolidating in a tight range. We may have another breakout coming that can take it to 380. And then AMD, as you all know, I'm very, very bullish on this name for quite some time. And this has now spent more than 2 months in consolidating in a tight range. This is the range that appears, as you can see, basically between 50 and 57, roughly, give or take a couple dollars. And so it may be a time for them coming pretty soon to basically leave this range behind and move higher. AMD has seen its MACD and RSI settle down. But more important thing is the volume has been, the last time we had a big push towards that resistance, which was last week. As you can see, this big green candle, the volume was pretty elevated there. Now I bring this up because there's a little bit of an update that we were not aware of before. There was a leak of AMD's new Navi chip that's coming out. That's the GPU. And a couple of days ago, the PC Gamer reported pictures of it. and we don't exactly know where they got it or whether it's even real or not. This official announcement for this have not been made by the company yet. This is supposed to be the highest performing, the best in class AMD GPU for the upcoming console gaming cycle. It's called NAVI or Navi, and it's going to support the 4K gaming, which is going to be a big theme in the Q3 Q4 when those game consoles from Xbox as well as the PS5 they start to hit the market. And the entire product is going to be the entire category is going to be controlled by really two companies, which is NVIDIA as well as AMD. But AMD is the one that has the lead in this one because it's the one that is actually powering with its microprocessor both of those game console. Now, according to AMD, Navi currently accounts for only 5.5% of the install base of AMD's, but this is catching up much faster than prior generation, which used to be called Vega. In fact, the majority, according to a survey by Bank of America, the majority of gamers, about 55% or so, are still using the legacy GPU. But that's going to change significantly once Navi actually makes its way into the public forum, and this is clearly out in the market right now. It's still in the beta tests, and the recent indications are such that AMD plans to launch this product based on its RDNA GPU architecture, and they're doing so to precisely time the release for the Q3 and Q4. So one to watch. I don't think this is built into consensus views. So if you've got a product in front of a major game console cycle, but it represents only 5% of the gamers market right now, but 55% of the gamers are using old architecture or old products called Vega, that means there's a big major pent-up demand for this out there. That's Navi, and it could be coming to the market pretty soon. So it could be a fun one to watch. NVIDIA is also going to be beneficial for this. NVIDIA continues to see pretty strong signs of demand, which is outstripping supply. According to another note that came out from Bank of America, they point out that according to a website called nowinstock.net, nowinstock.net, which is a website that looks at what's out there and available to buy from various retailers and wholesalers. According to that website, the recent history shows frequent stockouts for NVIDIA's most popular SKU, which is the RTX 2070 Super and RTX 2060 Super chip as well. Also, they're seeing that on Amazon website, they've observed that NVIDIA's higher volume for GTX 1650 Turing card has become the best-selling graphic card on the website currently. And right now on Amazon website, that GTX 1650 Turing card is out of stock until June 21st. So there has been a very strong demand, basically in the second quarter for the GPUs that NVIDIA sell, which tells me that we're going to see another rock-solid quarter from the company when the Q2 earnings report comes out. The pricing power is there as well. Keep in mind that the average selling price of Turing, which is out of stock on so many different places, is 80% higher than the other version, which is called Pascal. So all of these things are quite positive for NVIDIA, and AMD has a major product cycle coming that I don't believe many are paying attention to. So I'm watching these two stocks. So that's it from me. Avo, what do you have?
Looking at mattresses this morning, Tempur, TPX.
Yeah.
Now it's gapping or it's higher already pre-market because the company updated their sales projections, whereas they had forecast a 30% decline during when they put out their quarterly report. I can't remember exactly what that was. I think it was about a month ago. Now they expect it to be down 15% instead of 30%. So yeah, it's still down, but obviously it's a major change in terms of numbers. Management said that they're seeing a lot of pickup in sales in in May. So April wasn't a very good month according to what they said, but starting in May, they've seen an increase in orders. They also had started reopening at the end of May most of their stores, which were still closed. I don't know if there's anything else I can add. A couple of annual stock upgrades. Oh, there was also back in early May, we had noted a September call buyer, September 55 call buyer, 3,000 for about $8.20 or so. This is still in open interest. I think it's gone up to like $14 at this time or something like that. And also there's a large bullish accumulation of July 70-80 call spread that remains in open interest. I think this can run a little bit more. I mean, I was looking at some of the other betting companies. I wish I hadn't, because now I'm sad because we didn't go back into purple.
Yeah.
back in May. Now it's printing new all-time highs, and I think Sleep Number SNBR wasn't doing that bad either. So that's what I'm looking at. I think there's probably a little bit more upside left, maybe on momentum on these stocks.
Going back to TPX real quick, and I believe, so first of all, this would be a derivative of the housing market, which I just discussed based on based on Lennar discussion.
Exactly, that's true.
And I believe that I think Jay had brought up TPX, in one of our conversations as well. I think it was within the last week or so. And the stock is guided higher by about 5%, 4% in pre-market. So it's likely going to clear this $76 VOP resistance and likely makes its way gradually all the way to $82 to $83 in the short term. So this is the channel. And just to add to the color that you just talked about, for the second quarter, which is right now, that's going to end in June, the company guided, while its sales is going to be down 15% year over year, but that's much better than the guidance that they provided, which was down 30% year over year. And then if you break out the second quarter by month, they said, quote, strong sales in May and early June are mitigating a very difficult April. We are noting improving wholesale channel trends and continued robust growth of over 125% from global e-commerce quarter to date. So, unquote. So there you have it. So yes, I think this just goes along with everything else that we're discussing today in the housing market. So going to be a play, definitely going to be in play. Chronicle?
It seems, I just wanted to add that it seems like we've seen a lot of higher ticket item buying, or interest in any case, recently. We talked about boating stocks earlier, a couple of weeks ago. Housing, of course, is a higher ticket item, and betting as well. So I guess people have a need to replace higher priced or buy new ones. So yeah,
no,
that's good.
I think the simple answer is there's a bit of a pent-up demand that's coming back for a lot of them. So within the service sector, just because you haven't eaten out in a restaurant, you're not going to go 4 months later and eat out 4 months worth of food, right?
Well, hopefully not.
Right. So there's no pent-up demand in restaurant or airline business or any of those service sector. But when it comes to spots within the manufacturing or goods producing business where there's a general replacement cycle that's always in play, and if you go for this long of a period, 4 or 5 months of no purchases, and if now your purchasing power is starting to come back, whether you're returning back to your job or whatnot, that replacement cycle is what's in play, and I think there's a pent-up demand catch up for a lot of these. We discussed in webinar yesterday too that the comps growth that we are seeing in Home Depot and Lowe's is just phenomenal. It's just ridiculous. We discussed all of that in webinar yesterday. Chronicle?
Yeah, another housing stock. This is a preview of one of my long ideas, Louisiana Pacific. Symbol for that is LPX. I've been waiting to bring this up for a while now, but the stock had been trading at major resistance for several weeks, so I decided to wait for a pullback. Now it looks like we're getting that pullback. If you remember, this was a long idea I presented for the Q2 outlook. Neither made it as a top pick nor a key debate. I wish I had been more assertive about this because the stock is up 56% since April. Going forward, I think there is opportunity here for positive surprise to guidance for rest of the year. Because if you look at one of the charts that I shared in our chat, the company is coming up against a sequence of very easy year-over-year comparisons due to a disastrous 2019. Home building sentiment was pretty weak last year, especially in the first half, with building permits contracting for 6 straight months at one point and down by as much as 12% from the 2018 peak. And this weakness was before COVID-19. And as a result, the company's oriented strand board EBITDA margins fell from a peak of 33% all the way down to 4%, which is why earnings and revenue growth were a disaster for all of 2019. And then shortly after, we had the pandemic, which resulted in further downside to earnings revisions for Q2. I'm bringing up this name because building permits are highly correlated to the stock, and they can even have a slight lead from time to time. I think building permits are going to come in stronger than expected for the remainder of the year. My biggest reason for that is that not just pent-up demand, but there remains a massive housing undersupply in the US, especially for lower cost housing. Unlike 2008, we don't have a housing bubble right now. In fact, we have a shortage. Right now, the millennial generation significantly outnumbers Gen X, and both groups are projected to outnumber the boomer generation within the next decade. So most of the younger folks entering the housing market for the first time probably won't be able to afford a $500,000 starter home and its associated costs. And because we've gone roughly 10 years from 2009 to 2018 with a historically low level of houses being built, due mostly to beaten down sentiment from the last housing bubble, where a lot of home builders also went under, this has resulted in very little inventory. So it did not surprise me when Lennar 2 days ago mentioned it saw June first half orders jump 20%. Whether or not there is a recession, I stress that houses still need to get built here. Second,
hold on a second. So your projections here for LPX show revenues for the second quarter to go from so they would go from, or is it earnings per share actually for the second quarter to go from near 70% or 60% decline to flip to positive to about 15% increase year over year in the third quarter, and then a monster increase to all the way to 70% year over year in the fourth quarter of this year, right?
Yeah, that's what sell side is pricing in. I do agree with EPS, but the ramp, but I don't agree with their negative revenue projection for Q4. I think that goes high.
Yeah, so that goes high. Much of it will also depend on, by the way, the lumber pricing, because if we're seeing the hockey stick improvement in the EPS of this much magnitude, that's going to come down to how the random length futures will perform. Yeah. Which funny thing is that just yesterday I was looking at this chart, and I was then it did remind me of the discussion we had on LPX before, but because this actually has a technical setup for a breakout through 80. So interesting stuff.
Which brings me to my next point. If we look at the second chart that I shared, the other image, this is regarding producer prices. So the first chart on top shows the effect of last year's rate cuts on PPI. We can see that those rate cuts resulted in reacceleration of producer prices just a couple months later. So there is some lag here. As we all know, the Fed recently slashed rates and massively expanded its bond buying program. So I am expecting inflation to start inflecting soon, which should be supportive for some of the materials companies like Louisiana Pacific.
Interesting stuff, very interesting stuff. So we'll be watching LPX very closely. I think that your point about revenue expectations for third and fourth quarter being too low on the street could be right on the money. Let's watch how this random length lumber prices do, and that will be the great tell for how LPX does. Technically speaking, the stock is going to start to clear the 2550 VOP resistance soon, and that opens the door for short-term rally all the way up to 29. So that's about 10% that can be had if it basically returns back to the upper end of the channel. Good stuff. Jay?
Hey, Fahad. So stock number one, Constellation Brands. This morning, JP Morgan is adding the stock to its analyst focus list and raising their price target to 200 from 163. They expect share gains for its Modelo and Corona brand families to accelerate as Mexico beer production normalizes. Now, this was one of the reasons for MKM Partners downgrading the stock back in early May. If you go back to RBC Capital's note on Friday, they first of all, they kind of teed it up by saying, reminding investors that the company's production facilities in Nava and Obregon, Mexico, were forced to operate at reduced capacity since early April due to the Mexican government deeming alcohol non-essential. Well, they updated a note saying that in collaboration with their data science team, they were able to use GPS and geolocation data to monitor the pace of recovery of foot traffic at these breweries in real time. And so the note goes on to say, the data supports Constellation's commentary that production levels are starting to ramp at Nava and Obregon. The ramp at Obregon looks to be steeper than Nava. We attribute this delta to a higher level of automation at Nava, meaning requires less people. So, something to keep an eye on.
Yeah, I believe Mexico still has, while they're allowing Constellation Brands breweries, which includes Corona, I believe, to gradually open up, they haven't done the same thing for the Heineken breweries that are in Mexico, as well as the, what's the other one, Budweiser. Mexico as a country is the largest producer of beer in the world, in case if nobody knew that. But there's still lots and lots of parts of the industry that are established in Mexico that actually remains and shut down. And I believe Constellation is the very first one where these discussions are taking place. Tell me if I'm wrong about this, but I think that's what I read recently.
That does sound correct, though. That does sound right.
So good stuff. We'll be watching how these trends improve going forward from here with the foot traffic and the total production rising again. You understand there's very, very large resistance here, heavy congestion over here. But you know what? Especially if we continue to see shift from growth to value, this would still be in play. So on pullbacks, I think that this will continue to remain a buy. Next one.
Yeah, really quickly, Nikola, NKLA. Colin is out with an initiation note, so we're finally starting to get some of these. It's nearly 90 pages, so we haven't really had the chance to look at it yet, but I did just want to highlight one thing from their first page, saying that as far as an upcoming catalyst, they see June 29th, Badger Details, which is their pickup truck, and reservations as a possible catalyst. They're not modeling the Badger in their model yet until they get more specifics. But you can read that little quick paragraph right there. So just something, yeah.
June 29, everybody mark your calendars. That may actually be a bigger event than any kind of earnings from this company at this time, because the company has no earnings. So June 29, Badger pickup truck. Let's see what the company has to say, particularly about how many orders they have on the books. I still think this is just a lot of overhyped stock at this time. I think it needs to come in. There needs to be proper price discovery in stock. $30 billion in market cap already, near $30 billion or $25 billion now. I don't know. It has pulled back a little bit off the highs. I just think that the IPO had a hot IPO, big run, but I think for the next whole year, it's probably going to just sit around and play catch up while there is some price discovery as to where the institutions are want to step in. And you'll start to see that in the chart where it's going to start forming long bases. And then you will know that this is where the accumulation trends are happening. Right now, we don't know where those accumulation trends are going to happen. It's too early to tell. Good stuff. All right, we'll be watching Nikola on June 29. All right, see you guys in the chat room shortly.